All right, I think we are live. If you guys would be so kind as to give me a sound check and let me know that you guys have made your way into the Independent Investor channel, live stream number 56. It's really my pleasure to do this. It's one of those occasions during the week that I really look forward to. Got the group already kind of making their way in here. I'll give it another minute or so to give folks a chance to kind of come in. I do have something rather special planned for this evening, and I'm going to hope to deliver this in a way that keeps the focus on you guys. All right, and you guys that catch this live stream after it posts to YouTube, perhaps maybe you can't catch it when it's live. I'm going to try to tailor the live streams a little bit more around a consistent delivery regarding my portfolio holdings. I've taken a little bit of a turn in my evolution as an investor. I will talk a little bit about that, certainly for the better. Transparency is a key for me in offering what I consider a real benefit to you guys, because you get to sit back and you get to explore through transparency a portfolio like mine. I tend to deliver this message almost in line with a testimonial. It's really nice. You guys can come and agree or completely disagree, but at least we're striking up a discussion and awareness about what's possible in investing. And tonight I'm going to do a reveal of the portfolio for you guys. And that way, within the first 20 or 25 minutes, you'll have a complete rundown of the stocks. Before I offer that, I would really like to premise that delivery with a couple of things to keep in mind. There's going to be a lot of different genres that make their way into the Independent Investor channel. They may be coming into the channel for the first time, or they may not have quite the history with me. Just a slight introduction. I've been doing YouTube for about 3 years. I started this project with the very, very simple goal of reaching people and trying to put the power of investing in your hands. That was really the singular goal, and nothing has changed 3 years later as we've kind of progressed in our style. We've went through a few hiccups together in the stock market, nothing in way of recession throughout the course of the last 3 years, as we've been in a bull market of historical proportions. And I fear that a lot of people are probably going to become attracted to the stock market now for perhaps the first time. And that's great. It really is. But I want to make sure that each and every one of you guys understand that when I deliver my portfolio holdings to you guys, it is not with the intent of having you go out, rush out on Monday and try to mimic this portfolio. Now, if you've paid attention to the options on the channel, and you've paid attention to the power of the brokerage accounts that we offer, we do talk about the major brokerage. We also talk about some of the cutting edge brokerage accounts that are out there, M1 Finance really being the flagship brokerage out there to provide that free investing platform. I'm really enjoying the platform. I really want to thank Brent. I actually kicked onto one of his videos because I didn't know how to build additional pies with multiple sectors within that portfolio pie. And he did a very good tutorial. If you want to grab that link and throw it into the community here, Brent, you're welcome to do that. I found that extremely helpful. But M1 being one of those premier brokers that some of the newer investors are turning to, the problem is awareness. A lot of people don't know that those premier products are out there. Secondly, we have First Trade, which is one of those lightning fast brokers also that offer retirement accounts and lightning fast trades. So really it's kind of providing you guys some options out there with regard to research that you can do on your own and choose the aesthetic style that you want. Webull is the third no-cost broker out there. Those are the only three that I know about that I advocate on the independent investor channel. I don't typically talk about acorns. I leave that topic to some of the other channel creators. They do a great job in doing so. There's no reason for me to reinvent the wheel. But M1 Finance, First Trade, and Webull being kind of the cutting edge, no cost broker. I have personal accounts with both of First Trade and M1. I've shared the M1 pie in the link here. You guys can check that out. That's accurate as of today's close. So you can kind of get an idea. M1 Finance is really cool because it can let you set up these portfolios and do what is a form of back testing, and you can kind of see, had you invested in the portfolio, that's how it would have performed over the last 5 years or 1 year or 1 month. And you can kind of look at those back testing without actually investing a dime. And I want to encourage each and every one of you guys, if you're new to investing and you have questions about investing and you want to educate yourself up, I think if I were to have it to do over and I was talking to somebody who was interested in the market, there's a reason why your curiosity is perked with regard to the prospects of investing. It's very powerful. In whatever degree you're looking to seek out exposure in the stock market, it's very powerful. But that doesn't mean that you just need to go start dropping money on a stock market at an all-time high. That's why I typically love to come on here every Friday and kind of throttle back some of the excitement, hopefully, be realistic about our expectations, provide those options out there. So when we do have questions through the group, I've got Brenny Feliz, who's a great friend of the channel. I've got a question here that's really important. I'm going to get to that in due time. But those options are really important to just do some research on your own and try to pick those products or those brokerage accounts. You know, you can start the brokerage account without putting any money. Explore the platform. If it's not for you, no problem. You can move on to another without ever investing one single dime. And I think the way we want to deliver the message on the independent investor channel is a little bit different in that I'm not going to sit here and preach as if my way is the gospel. I don't believe that. I believe the investing landscape provides an infinite amount of ways to get exposure and to succeed. Okay, now conversely, there's a lot of ways that you can get involved in the stock market and fail. Okay, and as I run through this portfolio review for you guys, I really need you guys to put it into context. I'm 41 years old. Okay, I've been investing for over 20 years. This portfolio is not a result of a perfect linear line to where I am right now with just over a couple $100,000 of invested capital here. Make no mistake, this has been built up over the last couple decades. And I have, unlike maybe some of my viewers, worked through the financial crisis of 2009. I did not sell one asset through that. I weathered the storm. And I live to tell the tale today of being one of those investors that did not sell during the panic. So as I work through this, I really want you guys to understand, I don't want you to get discouraged at all. What I'd like you to say is look at the portfolio from an objective lens and say, you know what, I've heard Ryan talk all the time about working basically a regular job. And I know there's thousands and thousands of people out there who tune into the channel that make far greater income than I do. But I think there's probably a lot of room for improvement with regard to people's awareness to their own personal financial situations, and the options and the solutions that we talk about on the Independent Investor channel are just about as cutting edge as I can think about. There's a lot of channels right now talking about M1 Finance. I really hesitate to do so because here's the thing. I would love my YouTube channel to explode and grow and just make me a successful YouTube influencer, okay? But it has to be for the right reasons. And there are a ton of different channels out there talking about the M1 platform specifically, the Robinhood platform. There's a lot of folks jumping on the Webull bandwagon, and that's all great and plenty. I want those folks to succeed if there's success there to be had. But I think the topic is somewhat becoming a little bit watered down. I want to make sure that we're delivering a unique message on the Independent Investor channel. And if we need to dial back the content, which I have done for you guys that haven't noticed, I'm testing loyalty right now. I really am. I'm testing loyalty. I've said it many times. I will not do daily uploads and come on here and just throw content online to throw content online. I will not do that. And for you guys that come into the live stream every Friday, it just proves to me the level of devotion that you have, not only for the message, but your interest for yourself in this particular topic, because it is worth talking about. It is worth spending whatever it is that we have for maybe an hour talking about, okay? This is something that I typically don't do. Money and politics is something that I don't talk about, especially at work, all right? And politics is a topic that I don't typically enjoy talking about in general, because I think it ends up usually going bonkers really, really quick, or at least has the potential to do so. But money is something that I really think applies to a lot of people. And I think, unfortunately, there are a lot of people out there who, once you get them going on the topic, it becomes a little bit more comfortable to talk about. But it is a topic that for most people is, in fact, somewhat uncomfortable. Everybody's coming from a different scenario. Everybody's coming from different phases in their life. People are coming from different phases in their career. Some of the folks that make their way into the channel are in their 50s, 60s, and older. And I want to make sure that we're talking to those folks too, because quite frankly, those guys can find some of these solutions and apply them for themselves. And that's really key to me, okay? It's not one of those things that I want to provide the portfolio to you only to discourage you and say, I can never get there. I would rather have you come on and say, wow, this guy's being transparent about his portfolio. Look at what is possible. You know, you look at what is possible. The media nowadays, with the influences that are out, would have you believe that if you're just working day to day and you're not an entrepreneur and you're not a business owner and you're not this and you're not that and you're not this and not that, and they just want to fill your head with all of this, you can't do it. And I think it's somewhat satisfying to come onto a channel like mine, where I have been given no benefit. I really haven't. Everything that you see declared in a portfolio like this is hard-earned. It's hard-earned. And for you guys that know my background and where the cloth that I'm kind of cut from with regard to my first job in commercial fishing in Alaska, one of the hardest, most rewarding jobs I ever had. It was never really about the money when I used to do that. And then going through military boot camp as well, and working through where I'm at now, and always having investing as part of my life. And I want you guys to really consume and internalize investing and make it a part of your life. And if you take some proactive steps to make it part of your life on the onset, you can really gravitate toward the prospects of maybe making it less of a priority as you start to get a little bit more solid in your plan. What I mean by that is, it's amazing to me how many people out there are constantly thinking about money, and they're constantly worrying about money, and they don't have any money. So you can kind of see where I'm coming from a little bit here, is if we can make it a little bit more of a topic of discussion, make it a little bit more relevant for folks, make people a little bit more aware and a lot less naive about the topic, the more you can take and apply these on an individual basis in each and every one of your guys' lives. So again, I want to just welcome everybody to the channel. I'm going to kind of cruise up here a little bit and spot check. I've got Mr. Doug Whitaker in the group here, just a good friend of mine, been a loyal supporter. And again, loyalty to the channel is going to be something that I'm going to kind of reference in this particular theme in this video. I've been in a little bit of a self-study mode, if you will. There's been one particular channel that I've actually I've watched all of his videos, and I think he's probably the best financial channel on YouTube. So he is one of my featured channels, and Joe Carlson is one of those. And I don't mean to impugn. I know financial investor Brent is in the group here, certainly making good stuff. And that's kind of what makes the world go round, is a lot of different opinions. And Joe talks about that a lot in his videos. And I've really just kind of gravitated toward the message. And it's actually kind of demotivated me a little bit to come out and make YouTube, 15, 20-minute videos, or the quick shot videos. I just think some of the topics are a little bit tired on YouTube. And really looked forward to this live stream to come on, because I really think that I'm in my element a little bit more when we're doing this type of engagement. But for you guys that are interested in the M1 platform, I would encourage you to go over and take in a little bit of that content. Because initially I watched it, I thought it was really, really good. But there was one release here just recently about investing philosophy, where Joe does a really good job of comparing dividend investing to real estate investing. I thought it was spot on. I thought it was really quite brilliant. I thought it was very insightful. And if I had the link, I would throw that. If you guys know the video that I'm talking about, I know one of the subscribers to the channel referred me to the channel. And quite frankly, I put a ton of value on those connections with other channels. But I will tell you this, I don't watch a lot of YouTube, okay? I don't. But I found myself kind of going out of my way a little bit and identifying some of the similarities that myself and Joe have, as well as some of our dissimilarities as well in our investing approach. And I think it proved to me how so many different philosophies in investing can work. So if you're sitting there and you're a new investor and you're like, I can't do that, I can't make it there, I can't resonate with this message, I can't relate with your stock picks, Ryan, I just can't. I'm here to tell you that you absolutely can. The secret is going to be to take it in small pieces, okay? Don't try to look at a portfolio like mine or Brent's or any of the other featured channels. It's hard to watch some of the other YouTube channels that are making $169,000 a month. I can't even imagine that. Some of the other creators that really, are in their early 20s and they're seemingly retired. They don't have to work anymore. They've worked for 2 years and now they're done. That may be kind of a hard message for somebody that's working a regular job to relate with. I'm one of them. And I think that's one of the things that you guys can kind of relate with me. But that's my kind of quick plug and insight on some of the, I think, phenomenal content that I've been consuming on YouTube. And I encourage you guys to do the same. All right. So, Doug, welcome to the group. Sorry to hear about your dad. That's it's terrible when that does happen, man. But come on in, talk to the group here. Just always welcome. My heart goes out to you. But thanks for coming in and contributing to the message, the Independent Investor Channel. And also for your long-standing support. I really appreciate it. I do have All Good, who I've been having some phenomenal conversations with in the community forum on the channel. You guys have noticed that I've been a little bit withdrawn, a little bit on the channel. I'm not going to come on and manufacture content if my heart is not in it, okay? And right now I'm hanging on by a little bit of a string, providing live stream YouTube. If I had a little bit more of an adequate studio, I could probably come on and do live stream independent investor channel every night. No doubt about it. I enjoy this way more than I do sitting down and trying to manufacture and get my point across in a 10 or 15-minute video. Quite frankly, I'm charged with doing it for 5 minutes to get through to more of the masses. But quite frankly, if you guys really take to heart how I feel about investing and take to heart my longer term approach, hopefully that's some of the intangible benefits of the channel that you can take away, because here shortly I'm going to review my portfolio. That's the tangible stuff, and you can look for it and say, wow, thanks Ryan, really appreciate that. But some of the fundamentals, I don't know if there's anybody else that deliver it just like me. As a matter of fact, I'll say that they don't, just like I can't deliver a message just like some of these other creators. And I think at the end of the day, that's all right. I think connecting the community between really, really good content creators that I would never endorse unless I thought that the impact of their message benefited the individual that they're aiming their message at. Okay, that's real talk. You're not going to hear me, and I reserve the right to change my endorsement as well. But that's just kind of the way I feel. And appreciate you guys coming on here talking about the heat. It is hot here in Virginia to fight through it today. She's down in Texas. I used to live there and I know how hot it is. We're getting a good feel. It's hotter than it was in Texas here in Virginia right now. But anyway, I will get to my good friend Brenny, and I'm going to hit this question and then I'm going to get to the portfolio review. I'm going to do this for my friend here. I have two questions. I have 403B, but they do not offer a match. A lot of 401ks don't offer a match either, Brenny. That's pretty normal. But if you don't have a match, that's a really big negative in the account. And without looking at the details of the 401 or 403B that you have eligibility to contribute to, I certainly wouldn't want to comment on whether or not that program is good. I've seen a vast array of 403B, 401k programs that really range in what I consider very expensive to very, very affordable. Different products will be made up within these accounts. I just think that the 403B, 401k for the most part is a moneymaker. Okay, there's some people. You're not the one that exclusively benefits from having your account tied to the stock market. There's intermediary, there is high expense within these retirement accounts. With that said, I don't necessarily discourage anybody from contributing from an employer-sponsored retirement account. There's a couple reasons why. And I'll link this to my feeling about M1 Finance. M1 Finance is a really cool broker because for those folks that are tempted to go in and tinker with their account all the time, M1 is really good to allow you to invest and forget it, okay? Because if you're going in there and hitting the rebalance fund, the rebalance button, that's a big, big no-no in especially a brokerage account, okay? You can do it if you want in a Roth IRA, but you're probably impacting some of the compounding effect within that portfolio. So if you do have the 403, it can really act as that buffer. I'm not going to sit here and tell you that it's going to perform with gangbusters, but it will provide that opportunity for you to contribute, get some exposure from that employer-sponsored perspective. Now, what does that mean? Maybe you're happy with it. Maybe you try it out. Maybe initially that based on the high fees in that, you don't want to contribute to it at all. Okay, there's a lot of different options for you, and none of them are wrong. Okay, and I'm not going to sit here and tell you that you have to do one thing or another. You know me, and I know it frustrates you because you ask me a bunch of questions. But what we try to do is provide tools to allow people to answer the questions for themselves. Okay, now You guys know how I invest. I have an employer sponsored. I contribute to it. Do I think it's the best plan in the world? No, I don't. Okay. But your comfort in contributing to the 403b can be counterbalanced by contributing to it and then starting the program that we talk about all the time, starting that individual Roth IRA account, which I think is the premier product. And then it comes to, okay, once you decide to do that, then you pick the broker. Okay, once you pick the broker, get familiar with the broker. Once you're familiar with the broker and you feel confident with paring out that dollar cost average section out of your paycheck in addition to your contributions to the 403, perhaps maybe you don't contribute so much to your 403. Maybe you jockey between the two contributions. Having those two accounts and investing long term is not going to be a bad thing. Okay, but I don't talk in definitives. I've done videos like this in my catalog, videos that nobody ever watches anymore, but I explain all this stuff. I don't come on and say you need to do one way or the other. I don't believe in that. And that's kind of what I talked about at the top of the program when I talked about, people talking about other programs and this program's no good and I've got the best program. I don't speak like that. But I would say if I could condense the answer to your first question, I would say do everything that you can do. If that 403b you're eligible to contribute to, do it, and then use your contribution amount to that to allow for enough surplus in the budget to roll over and contribute to an individual account, okay? Now, the additional layer is when you end up getting married, you end up having a spouse, you can double that individual contribution as well, right? So all good stuff. Don't lose sleep over it. Don't stress about it. These are all good options. Remember what I always say, investing is a luxury, okay? It's not one of those things that everybody is eligible to do. So if you are, approach it diplomatically, approach it smartly, approach it calculatively, and make decisions based on your comfort level, okay? But I do acknowledge what you're talking about. I don't know the insides of the 403 you're talking about, so I want to be kind of careful with telling you yes or no, nor do I even do that type of thing. But do both is my consensus on that. But they do not offer a match for me. Should I still put my money in there or take that money and put it elsewhere? I think if you're looking to start the account at this point, starting with smaller amounts is pivotal. And remember the aspect that I talk about all the time. Let's say you say, you know what, Ryan finally answered my question. It only took 56 live streams for him to do so, but I'm going to do it all. I'm going to do the 403. I'm going to do the individual retirement account of the Roth variety, but I'm also going to contribute to cash. And I'm gonna allow myself to evolve and monitor those buckets as they grow, progress, as I fund them, watch how they perform. I don't really watch my my employer sponsored very often. I let it go. It's a true passive avenue, just like most of my investments anyway. I don't spend a lot of time monitoring those truly passive assets. Now, I'm going to be honest, this account that I'm going to declare to you tonight, I monitor it every single day. Absolutely. It's a hobby of mine. It's part of my life. And I think the results show that level of commitment and devotion to always looking for a strategic edge. I'm always looking for that edge, whether or not it exists or not. I will contend that by paying attention to those strategic edges when they come up, if you're not paying attention, you're not going to catch them. You're not going to be able to identify those opportunities that I talk about through strategic buying or through dollar cost averaging the portfolio, perhaps maybe monitoring the stock market, picking up those bargains when they happen, okay? And you just got to pay attention to that. My level of attention is fairly high, all right? Brenny asked a second question here. I'll get to that. Also, when I put my money into my Roth IRA, how do I get it to start investing it itself? I think you mean dividend reinvestment. If I'm not understanding you correctly, investing dividend reinvestment or portfolio reinvestment is actually really simple. If you guys kick over to that link that I put into M1 Finance, that's a very simple setting in there where you auto invest the cash, and basically that will portfolio invest. M1 Finance does it a touch different. I'm actually interested in the way that they do it. They don't dividend reinvest in the stock that's paid. They reinvest the dividend when it's paid, and it goes to fund the lowest level holdings within the portfolio. Kind of cool, to be honest with you. It's kind of a cool way of investing. You're still being paid the money, and quite frankly, those new inflows of cash are going to underweighted assets within the portfolio, assets that you've asked the portfolio to maintain that certain level in. So think about the prospects of that, guys. If I set the seed for you and you're like, man, this M1 Finance, it comes up all the time, I'm going to go check it out. It's really worth checking out for yourself. And a nice thank you would be all right sometimes. So anyway, what do you think instead of putting it? So yeah, that's my response to Brenny there. I've got financial investor here in the group who pops in. Great to see you, Brent. I don't know if you have an opinion, if you've kicked over and watched Joe's content. Really just doing a great job. I give my hats off. I wish I could have got 20,000 subscribers in 3 months, but that's not what's in the cards for the Independent Investor channel. I wouldn't trade my loyal audience for anything. So we're going to continue plugging away the little train that could, for sure. So I've got Mr. Bob Wright. I've got Greg Cami in the group here from Southern California. Bob Wright from the Great Northwest here tuning in. We lived in the Central Coast. These guys are talking, getting to know each other in the community. Victor Hernandez says it's hot. No kidding, burning up. Brenny offers another question here. Has anyone heard of the SPHD ETF? I definitely have. It's the top 50 dividend payers, the S&P 500. It's offered by Invesco. I'd rather not have such a steep expense ratio. And I know you guys are going to be like, geez, it's only 30 basis points, Ryan. Get over it. But run the numbers. I mean, 30 basis points it's going to cost you a few pennies to own that exposure. 50 stocks. I was running a little bit of experiment. And if you guys, the loyalists, have tuned in for 32 minutes, I will mention something that might perk your guys' curiosity a little bit about how my mind works and how I'm constantly looking for somewhat of a strategic edge. What is the problem with just taking the picks from the SPHD and throwing those stock picks into your own portfolio with M1 Finance free of charge? You save the 30 basis points, you own exposure to those 50 dividend payers. I looked through the list of the dividend payers. The highest weighted holding is Ford. It's really not a stock that I'm that interested in. I think fundamentally the price is right. The dividend is attractive, but I don't like investing in companies that are so heavily tied to unions. And you go down the list there and you can kind of see some of the names in there. Some of those stocks have really relatively high price to earnings ratio, but good dividends. Okay. And these 50 dividend stocks that they picked out to formulate the SPHD, I bought a little bit of it. I did buy some of it. I bought it in the first trade account. It's a good ETF. It's a good one. If you want some good dividend exposure, I think it pays close to, if not a touch over 4%. So pretty attractive there. That's guaranteed money. It gets you a little dab of exposure there to the dividend payers there, the S&P 500. I think they parlayed about 20 additional that pay dividends in the S&P 500. It did not meet the criteria for the SPHD, but it's a good fund. It really is. Would I want to put all my eggs in that basket? Probably not. It's a very small position in my portfolio. Just like a lot of these names, you're going to find 1 or 2% of my total overall holdings when I start working down the list here. But I like the fund. It's good. They do a good job. I personally own it. So I liked what I saw. There wasn't a lot of those names within that ETF that I actually had individual exposure to, if I'm remembering correctly. Actually, I take that back. There was a few in there. There was a few that I came across to where it's like, well, I own the individual asset, but I actually went on to M1 Finance and ran that experiment myself and just duplicated the ETF within M1 Finance and saved the 30 basis points. I mean, it's kind of lazy, to be honest with you, just to buy the ETF because they bottled up the product, put a bow tie on it, and are selling it to people at 30 basis points. But that's just my opinion. All right. All right. Talking about Ventura, California, one of my favorite places in the whole world. Doug Whitaker says, good evening. Good evening to you, my friend. I'm going to wait till a lot of the comments pop in, and they just did. I'm going to sift back up here, guys. Now I see the group here that just kind of popped in, and I'm going to kind of try to work down the group here. If you guys did not notice, to kind of kick this portfolio review off, you'll notice that I went ahead and provided you guys the link to the Spider portfolio that I have with M1 Finance. That's yours. You can go look at it if you'd like to. That's the actual holdings as of the close today. Just one of many benefits that I hope you guys appreciate when you come in and catch the live stream here. But I'm going to kind of get into my portfolio review. I'm going to offer a lot of different segments of this portfolio review. There's over 60 holdings, okay? So if you guys want to take notes, you can. I've kind of shied away from the whole like, oh my gosh, you can't invest in any stock that I invest in. The problem with that is you've all heard of companies like Lockheed Martin, Northrop Grumman, Apple, Wells Fargo, JP Morgan Chase, Bank of America. You've heard of all these good companies, Disney, ExxonMobil, Chevron, right? Royal Dutch Shell, Pfizer, Merck. I can keep going, but you know, it's hard for me to come on and say, do your own research. With that goes without saying. I know I'm talking to an astute audience. And for the beginning investors, I'm going to stress to you, it's a very, very important that you don't go try to manufacture this portfolio overnight, okay? This has evolved over a couple decades of investing, all right? So please understand, I want you to look at this and be like, wow, I might be able to do this if I make investing a little bit more of a priority in my life, and I contend that anybody can do it. Anybody can do it. There's nothing special at all about what I've done except for the willingness to do it. That's it. All right. So I'm going to cover the top 10 holdings to start. I think that'll be kind of interesting. What you'll see on the board here behind me is my percentage of sector exposure. Very simple. I've laid it out. I've identified the 11 sectors along with the blend here. There's a few Vanguard ETFs that show up as a blend. Okay, so just about 4.5% there in the total portfolio, but the rest are the 11 sectors. What's in blue is the percentage of money that's allocated to those particular holdings within those sectors. Okay, but I'm going to cover. I do have a pretty good bulk of cash in the portfolio right now, so I'm going to skip that. I don't think that that's really appropriate to offer, but my largest holding from a percentage perspective is a bond portfolio, a bond holding from Vanguard. It's the Vanguard's intermediate term corporate bond, 87 shares there. It's about 3.75% of the portfolio. These are just the top 10 holdings. Okay, and then I'm going to get to the list of the rundown. The next largest holding is a pretty awesome position in Royal Dutch Shell, which is a monster dividend. I'm really excited about my energy exposure. I always have. You guys know I enjoy investing in energy. It's just one of those that I naturally gravitate to. I've made a pile of money with energy, but Royal Dutch Shell is one of my 4 major holdings in energy. And that's about 2.25%, 75 shares of Royal Dutch Shell. And this is just how they fall in the precedence order. The next is the largest bank in the world, JP Morgan Chase at 41 shares, 2.25% of the portfolio there. Blackstone Group has just recently dropped their limited partnership designation. I do own 100 shares of Blackstone Group at 2.19% of the portfolio. Next is Marathon Petroleum, starting to crawl back up. Probably bought it at an unopportune time, but the shares got more inexpensive. I stepped in and bought more of it. A great dividend paying stock there, 81 shares of Marathon Petroleum and 2.15% of the portfolio there. Vanguard short-term corporate bond ETF, okay? So this is capturing some of that bond exposure that I have, and because I've got a good bulk of my money, they pushed up into that top 10 category in the portfolio. So that's the short-term bond ETF that I have. I've already shared those ticker symbols with you guys. The next one is ExxonMobil. So you can see here, my percentage in energy is relatively overweight. Where's energy? Here at 10.99. I wouldn't really call that overweight. We're looking at a recommended sector allocation in energy of 8 or below. So I'm a touch overweight there, but I'm glad ExxonMobil has done nothing but do its work as a small stock that just generates cash for me via the strong 4% dividend. So I've always been glad to be an Exxon stockholder. I've been red in the stock for a long time, but it just makes it that much more eligible to contribute to, in my mind, to be honest with you. And I've got a lot of free shares compounding for myself within the holding, and it's going to be a long-term holding of mine. The next one in the top 10 is 25 shares of Salesforce. Salesforce is one of my few growth stocks, exposure to the cloud. I just think it's one of the premier cloud players. I mean, you could really take your pick between Microsoft, Amazon, Salesforce, Adobe, I don't think you could go wrong with any of those names, but Salesforce does make the top 10 at 25, 1.9% of the total exposure. And then Intel, which, my goodness, guys, you saw how brief that opportunity was in Intel in the low 40s. It's really come off of those oversold conditions here, just crept above $50 today at the close. 77 shares of Intel at 1.85 in the portfolio. And then finally, to round out the top 10, one of my favorite stocks that I own is Visa. In the payment space, I've owned PayPal on and off as more of a trading position. Visa is absolutely one of those cornerstones that I've had locked into the portfolio for a long time. And pardon my French a little bit, but it's making me rich. I mean, this and a lot of other holdings as well, Visa has just been a pleasure to own. This company makes just a ton of money. They make a ton of money no matter what the economy is doing. I think I saw that they make as much as the entire country of Australia in a quarter with Visa. And I don't know if that's true. I haven't validated, but this company makes a ton of money. They do something a little bit different with their, they don't pay a large dividend. And what they do is buy back a lot of stock. That's just traditionally what they do. They're very good stewards of their money. Very well run technology company, quite frankly. I know a lot of people consider them financials. I don't. I consider them a technology company with their proprietary payments offering. And that's number 10 on the top 10 offerings in the portfolio. We can keep going. I'll rapid fire throw these guys at you. The next one, I've got a page here in the report which declares what's here on the board, so you can kind of know what I'm looking at and where my exposure lies in the portfolio. No real rhyme or reason other than the fact that the names that I hold, multiple names within these sectors, just make sense. This is how it settles out. This is the cream that comes into the report with regard to the bunch of industrial holdings. You can see I'm well overweight in industrials right now. There's a reason for that. And I'll kind of get to some of those holdings. And if you're taking notes or you want to play this back or wait till it posts, you can certainly walk through and pause the video as I go through and offer these holdings for you guys. But I'm going to go through and offer these rapid fire. Okay, and I'm going to try to offer them rapid fire enough to where if you are taking notes, you can kind of gauge my portfolio. You can do whatever you want. You can make a portfolio pie in M1 Finance. For you guys that have the luxury of doing that, it'd take you 10 minutes to take. I mean, you guys could follow along. If you have a laptop, just open M1 Finance, go to the research tab, and throw my portfolio into a mock pie. That would be the best way to do it. That way you can actually back test my portfolio performance over the last 5 years. I may do that myself. So steal my idea if you'd like. That's kind of a cool idea, but let's kind of get started, and I'll throw these out there for you if you're ready to get going. Adobe Systems, number one, that's 1.49% to 10 shares of the portfolio. Apple Computers, 11 shares. AT&T, 108 shares. Bank of America, 100 shares. Blackstone Group, 100 shares. Boeing, we're looking at 5 shares of Boeing. Boeing had a huge day today. Caterpillar, one of my industrial favorites, and actually one of my first times actually owning Caterpillar. I don't think I've ever owned it before, minus probably a swing trade that I took in Caterpillar when I identified an opportunity when it was low in the 50s, 60s, a couple of years ago, I think. But reestablished a position in Caterpillar, 15 shares. Chevron, 19 shares. China Mobile, 15 shares. Cisco, 50 shares. Citigroup, 46 shares. Coca-Cola will be 25 shares. Comcast, 35 shares. Corteva Inc., 37 shares. Costco Wholesale, 5 shares. You guys recognize some of these names, right? Some of them you may not recognize, but some of them, as I work through here, you're probably going to recognize. Disney, stock to own forever, yes? Right? Dominion Energy, one of my absolute favorite, probably in my top 4 in the utilities sector. That's what makes up partial some of this exposure here in utilities at 4.19. Okay. Dow, DuPont, 2 separate, they've split now. ExxonMobil, FedEx, General Electric, Home Depot. We got 10 shares of Home Depot. Intel, already mentioned Intel during the course of the live stream, 77 shares of Intel. IBM, 10 shares. Johnson & Johnson, 22 shares. JP Morgan Chase, 40 shares. All right, that's sheet 1. Now, keep in mind, too, what I really aim to do is provide some awareness on some of the top tier, best of breed stocks in the industry. And these names right here are some of the ones that I really want the focus on when we're talking about what stock should I buy. It's the most common question that I get all the time. Well, look at your Dow 30, look at your S&P 500. I don't see a whole lot of reason to stray a whole lot further away from those offerings within those major indexes. Okay, so these are just representatives of those. We'll continue on. Kraft Heinz, 62 shares. A new holding in my portfolio. Look at the valuation on Kroger, 100 shares. Estee Lauder, 5 shares. Lazard Limited, 20 shares. Lockheed Martin, 5 shares. Marathon Petroleum, I've already mentioned, 80 shares. Medtronic, 25 shares. Merck has 25 shares and Medtronic has 25 shares. Nextera has 10 shares. Nike has 10 shares. Northrop Grumman, 10 shares. Pepsi, 18 shares. Pfizer, man, it's opportunity in Pfizer for sure. 52 shares. T. Rowe Price, 10 shares. Raytheon, 10 shares. Royal Bank of Canada, that's a new holding in my portfolio, one that I actually picked out of one of the Joe Carlson videos. There's a couple Canadian stocks in here. I was aware of both of them, but picked them out, did my research, and actually picked up both of them. Royal Bank of Canada is one of them at 20 shares. Royal Dutch Shell, 74 shares. I've already mentioned Salesforce, 25 shares. State Street, 35 shares. Finally back on the upswing on State Street. I'm happy about that. Bought that on valuation and it still continued to go down. But that's making its base and coming back. Target, 10 shares. Toronto Dominion Bank, the other Joe Carlson offering, I picked that up. Union Pacific, 25 shares. Excuse me, Union Pacific, which has been on a tear this week, 10 shares. The Toronto Dominion was 25 shares. United Technologies, 18 shares. United Health Group, a new holding in my portfolio, defensive in nature, 10 shares. And then a lot of the mixes, the Vanguard Emerging Markets ETF, 51 shares. Vanguard Intermediate Term, a bunch of bond funds that I've got. I'm not going to bore you with those share balances. I've already declared those to you guys, what I've got there in regard to some of the blends that I've got as far as the bond exposure there. 10 shares of VTI. The Vanguard Utilities ETF at 16 shares. Verizon Communications at 50 shares. Visa at 20 shares. Wabtec at 1 share. That spun off of GE, I believe. I got a free share there. Waste Management with 10 shares. Wells Fargo at 54 shares. And finally, 3M Companies at 12 shares. That's the entire portfolio review, guys. I hope you appreciate it. I will say this. I will re-emphasize a couple things. When I do that because it's rare. First of all, it's rare for somebody to come on and do that, okay? I don't get compensated whatsoever for doing that. Furthermore, I want to drive home the potential of approaching your stock plan or your stock strategy from a builder's perspective, okay? When I started investing, to build a portfolio like that required some finagling. It did really require a broker. I can remember having a lot less access to the market. Right now, your access to the market can be just as easy as downloading the M1 app and starting yourself on it. Now, please consider using the portfolio, the links to M1 Finance. I'm affiliated with M1 Finance. I can receive compensation if you do fund an M1 account that can help support the channel. Those are always in the links and description in the videos that I offer. If you don't, that's fine too. Go check it out. At the end of the day, I want you to explore some of these cutting edge products and understand what they can mean for you. Now, the list that I just rattled off for you guys, let's say you go into M1 Finance and you build this pie and you start throwing them in there. Raytheon, Northrop Grumman, Wells Fargo, Waste Management, 3M Companies, boom, boom, boom. And you throw all 60 of these picks. I think I counted them. And between the ETFs and the single stock offerings in this portfolio, there's 69 holdings. So you can take the Independent Investor Channel's portfolio, throw it into M1 Finance. Now, the ironic part about the products that are available now is you can invest in that portfolio with as little as $100, okay? It's $500 to start minimum for the Roth IRA account, but the way that they can buy partial shares within that portfolio, it's really quite exciting to start building up a large portfolio and start to backfill some of these good names in a portfolio. Now, you don't have to have 69 holdings, okay? You don't have to buy single stock. You can go ahead and buy the ETF route if you want to. All that research is available right there for you to do. I always recommend that you guys go onto the Vanguard website and look at those products for yourself. You don't need me to tell you what to invest in. You need me to introduce where you can find the information. That's the whole point of why we do what we do. All right. So I'm going to go ahead and scroll down the list here. Some of the folks in here, 525, he's giving me crap about the time that I started or scheduled my live stream. I apologize for that. I always schedule it at 9 o'clock Eastern time. I know he's out on the West Coast in Oregon, so sorry about that, Brent. Let me cruise through here and see if I can find some questions here. I've got Greg in the group. Again, welcome to you. Bob's in here. K9 says, awesome portfolio. I think K9 was the one that actually made the reference that I was talking about earlier. So I didn't see I didn't see K97 in the group here until just now. I really appreciate that recommendation. I do get a lot of recommendations. Hey, check this out. I'll go check it out. And for some reason or another, the approach or the style of investing just doesn't resonate with me. That doesn't mean that it's right. It doesn't mean that it's wrong. It just means that it's not for me. And I would encourage each and every one of you to kind of have the same mentality when you approach your investing. I mean, be a little greedy. Take what works for you and discard the rest. Okay, you don't have to entertain everybody out there that seemingly got the best idea going. I don't believe that exists. But you know, be critical of the information. Use the philosophies that you can really gravitate to and respond to and feel like you've got the greatest chance of success in the market. And then just go ahead and dismiss the rest of it if it's not going to work for you. All right. I've got Mike O in the group here, so 2 in a row. Nice. I'm glad you can make it. Honestly, it's really cool. See you guys catching these in sequence. To no echo. I had 2 tabs open. My bad. Even Bob, you guys are talking. One of my favorite people since I've been doing YouTube, no doubt, is right below the one and only Doug Whitaker, who's Jared Odell, who's made insurmountable contributions to the Facebook group. And I do apologize. I've been really withdrawn from some of my projects. That's just me. I'm mental about some of that stuff, guys. I have a very, very hard time just selling out on a project if my heart is not in it, okay? And I'm going to tell you right now, the Independent Investor channel needs to be on a plane right now for me. It does. I mean a plateau, okay? Not an airplane, a plateau. It needs to be there for me right now. That's just me. I will wait until I come out of this phase that I'm going through. I believe all creators do it. Maybe they don't. Maybe they can come on and just regurgitate content every single day because they've got all the time in the world to do so. I don't. Now, how does that relate to the message and what we're trying to do on the Independent Investor channel? I have left no stone unturned with regard to my message. If somebody really wants to understand my perspective, they can go back and watch the content that I've posted, raw and uncut, and sometimes very unpolished. And they can get my perspective. There's a lot of good material there, and it really helps summarize for a lot of new investors what my approach to investing is. And if you spend a little time doing that, certainly I think you'll come out of it with a little bit more understanding, and you can relate with where my message is and where it's coming from, why my style is the way that it is, why that I have the philosophy and approach that I do. All right. But Jared Odell, it's great to see you, man. Good evening to you. Thank you for coming in. Doggy Days, which is an interesting thumbnail. I love it. I've got In Munch. It's awesome. Great to see you guys. Make your way into the live stream. I just hope all is well for you guys. No doubt about it. You guys have been catching these live streams for quite some time. I hope you don't mind me making it a little bit personal and thanking you guys for coming on and spending a little bit of time reviewing what it is I feel like is a winning strategy when you're trying to make it fit for you. That's always the goal for me. I'm always trying to get aggressive on what can work for individuals, why I talk about certain things and how it can relate to you. I mean, I just gave you a portfolio that's worth well over $200,000, But I also offered you a solution to where you could take those picks, drop them into M1 Finance, take a look at the performance of my portfolio free of charge. It'll cost you zero, no money. So good on me for always kind of trying to look and take that extra step for you guys, because I don't go on here to waste my time. I don't go on here to waste yours. I'm trying to cut to the chase. And sometimes it takes me all of 2 hours to cut to the chase. I do not stop talking for 2 hours straight until I get the consensus and the message through that is aimed at making an impact. All right. So thanks to you guys for coming on. Really appreciate it. Avi A, just a devout follower of the channel, supporter of the message. Happy Friday. It's been a while, but happy to tune in. Awesome. Great to have you. This is number 56 live stream. And I'm glad to do it. I've got JMac Investing. I don't know if JMac runs his own channel. If you do, I'd like to give you a shout out for sure. It's the least I can do for making your way in on a Friday evening. Perhaps you have better things to do than listen to me rant about investing. I'm just a regular fella, so hopefully I throw enough dry humor in there to where you're having some fun and maybe learning a little bit. If I say something that you don't understand, or if you want to get my opinion on something in the investing landscape, investing philosophy, approach, why I do what I do, what self-directed investing is, don't hesitate. The JMac Investing, a shout out to you. Thanks for coming in, making your way into the group there. I don't know, I'd kick over and check out your channel. If in fact you're just starting or you have a large channel, hell, I don't know, you could have 1 million subscribers. I wouldn't know. I don't judge an individual based on that. Nor do I expect you to judge me based on my little channel that could. All right. We're a small channel, but we're making a big impact. All right. Welcome to the live stream. Thanks for coming on, man. Greg says, good point. Investing according to your level of understanding and experience. I could make a series of YouTube videos on that very thing. And I know it sometimes can get a little bit long-winded, boring, but it's so important to talk about the philosophy and the preparation of investing, okay? There's so many times where I see people that want to get investing, but they don't want to try to identify who in fact they might potentially be as an investor, okay? They want to take the easy route. That's why I premise. And this is something that I pick up on funny things when I listen to Joe, for example. I don't mean to make this about the Joe show, okay? I don't, but I just feel that positive about the message, and that the things that I pick up and things that he said, I really do agree with. I really do. And the point of aligning your exposure, okay, what I talked about there are individual stock picks, okay, of a growth and dividend nature, all right? The key for me in evolution and gaining this portfolio is creeping into these positions in a manner that makes sense from an exposure perspective. You guys have heard me talk about this all the time. And the key for a lot of you guys, if you're just starting out in investing, and especially right now, like, why would you just jump in with both feet right now? Now, if you're young, you could make more of an argument to do so, but you're doing it with the acknowledgement that the stock market is now at a condition where it's at an all-time high, okay? So seeking your exposure limit, it's going to change over time. You guys are going to see a different side of me when this eventual bear market and recession sets in. You are going to see a different independent investor. I'm going to be the same fella, but when I talk turkey and we talk about finances, you're going to see a different approach. Why? Because my insistence upon taking advantage of a sale in the stock market is going to become a lot more evident than, like, right now. I'm complacent right now. I'm complacent. I'm not investing a whole heck of a lot. I may be putting some token positions in some stock that I've got plenty of dry powder on the side, but I'm not being aggressive on the stock market. Why? Why? now is not the time really to be excited about putting huge positions into stock. It's the reverse way of thinking. My excitement comes when I see things that I've monitored for maybe a couple of years creep up to some pretty expensive valuations, and then they adjust back, and I can pick those stocks up at a discount. I'll still keep the existing shares that I've accumulated, but the opportunity could present itself to pick up more shares at a cheaper discount. And that's just the philosophy that I share with you guys on what's worked for me. Okay, I call it opportunistic buying, but I will say this: it takes a strong heart and a strong mind and a disciplined investor to look at the stock market with no emotion when we're in a 34% or 30 or 40% recession, bear market, and pull the trigger on stock. There's not going to be one person that comes onto YouTube and says, now's the time to do it. I think there will be a few. I do. Because if they're talking the talk, they have to be able to walk the walk. And that in and of itself is what a successful investor will do. And very few people can do it. Very few people. Guys, it's scary to think about the prospects. And I know everybody's going to sit there and say, Ryan, I heard you. I got it. I got it. Okay. I'm just reminding you, when push comes to shove, there will be people coming onto YouTube throwing tomatoes at me like you have no idea. Like, Ryan, you're a complete idiot for investing in the stock market. You were brilliant when it went up, but now you're a complete idiot because it's going to zero. No, it's not. Okay. That will be the time where I am working my hardest to get the most out of that opportunity. And it's not going to sit there and scream at you and say, now's the opportunity, go ahead and take advantage. You're going to have to pay enough attention to where you're taking advantage of that, buying little chunks on the way down. So, all right. A good point investing. So huge week for earnings next week. It is. We get the FANG stocks next week. Big whoop. I have no exposure to it. The only one I'm really tempted to take another trading position in Facebook. I like the company. I don't know. Joe has jaded me a little bit into not only reaffirming my dividend posture on companies, but certainly maybe to just be careful playing with fire this high and buying those high beta names now with Amazon, Facebook, reporting next week, Google. The problem is, from a valuation perspective, Facebook and Google are fairly well valued. They're probably, they're not overvalued. So you can justify buying both of those names. They're juggernauts. They're making money. You know, we forget that they blow out the quarter every single quarter. Google had a trip up on the last quarter, but I like both of the companies. I'm not exposed to them. If you guys picked out the couple growth stocks that I have currently in the portfolio, Adobe being one and CRM, Salesforce being the other, I'm happy with that level of growth exposure in the portfolio. I contend that it's hard for me as a well-rounded investor to just dismiss the prospects of growth investing when I know that that's a lot of how I've accumulated wealth. That's a little insight from my own personal playbook. And if you heard me, you'll be wiser for it. All right. All right. Let's work on down here. Got Dan Tanks in the line here. Been with the channel for quite some time. I just appreciate your support of the message, Dan. Thank you for making your way in on a Friday. Really appreciate it. One discouraging thing is seeing all the red bonds and stocks down. It's interesting because it really hasn't gone down that much. I mean, we've had the first, I think this week ended up negative. No big. Market at an all-time high. You can hardly see this blip on a chart, to be honest with you. 27,000 Dow. I would have never thought this would have happened this fast. Tend to move some of my focus off of that. Currently, I mean, I'm fair to acknowledge that the market's at an all-time high, but I'm just being very careful about some of the positions that I enter. I was throwing out some of those percentage of total overall holdings from a percentage basis in the portfolio. I mean, my top 10 My top holding is a bond holding at 3.75%, down to 1.75% total in the portfolio. I have not one holding that's over 4% of the total value out of 69 holdings. So, I mean, just to give you an idea, I'll scan through here and validate that for you, but I don't think I'm that far off on that assessment. I don't. No, I mean, we're in between 1 and 2. Many holdings are well less than 1% of the total overall portfolio holdings. So, yeah, not one holding. That one, Vanguard Intermediate Term Corporate Bond, is 3.75%. It's the largest holding I have. It's about $7,500 in that. So just to give you an idea of my relative perspective and approach to the stock market now in its current condition, okay? Just use caution. I don't like to say be careful, okay? I don't like to, say, oh, you need to be leery. Leery is an emotion. You don't need to be emotional about investing. Make a freaking plan, initiate the plan, and stick to the plan, regardless of what the market decides to do, okay? It's not personal. Huge weeks for earning next week, the UTX 3M. I'm curious to those. Just to be honest with you, I mean, UTX has been on fire. I wish I owned Honeywell. That's kind of the wag throw out there on the industrial side of the house. Honeywell is such a good company. But UTX has done quite well. 3M has done equally as bad. It's horrible. So I'm still glad to be a stock owner in the company. I don't lose sleep over owning 3M. It's a freaking luxury. I chose to own the shares. I own 12. And that's just the way of it. If 3M, again, never turns positive again, which I highly doubt, then I'll give the shares to my children, and they can carry on the legacy of owning the dreaded 3M. All right. Yes, SPHD ETF. I have all the holdings in my M1 Finance as individual shares, no expense ratio. I don't know. I just think it's a cool product. It's fun. It's fun. It really is fun. And it gives you an opportunity to pick off some of these shares. I mean, I wasn't kidding about your prospect of just dropping my entire portfolio into an M1 pie. I might do that. I just came up with that idea on the fly. I didn't think about it before the live stream, but that is an idea. If you guys go back, play it back, drop them into M1 Finance and share it in the Facebook group. I'd love to see my own portfolio throw on there. That'd be fun. So, anyway, yeah, it's just an idea. It's one thing that kind of jumped out at me. And, as a show that really wants to focus in on fees, it's not something that I'm going to ignore. It is what it is. Get used to looking at funds and ETFs. I mean, look at the VYM. I think they're 0.08, maybe 10 basis points. So a third of the cost over time, string it out over 30, 40 years, that could be a significant impact to the portfolio. Is it worth not owning the ETF? Perhaps not. But again, you do have options with the M1 Finance to go on there and throw those picks in there. Maybe there's certain holdings in there that you're not interested in. Maybe you use looking at the ETF holdings in SPHD, and it gives you some ideas about maybe where you want to go. Some of those PEs in that, they do pay a good dividend, but some of them, Iron Mountain's 8%. I don't like the prospects of Iron Mountain, so I don't want to invest in it. So just to give you some of those ideas, Weyerhaeuser's in that group. Some of the picks are coming to my mind, but review it for yourself, and you can kind of see what I'm talking about in there. All right. Ernesto, good friend of mine, man. It's great to see you. Good to see you guys popping in, supporting the channel. It's a little bit of validation. You come in and get to sit across from the Independent Investor channel, just like I'm there with you. Give you a little bit of encouragement. But at the end of the day, the live stream will end and you go back on with your regular lives, and hopefully you can kind of take a little piece of motivation for your own families, because at the end of the day, that's what we're looking to do. Carefully, calculatively approach the stock market, which can be very humbling. I've said it 100 times on the channel. It's not something that you want to play with, okay? Excuse me. The second that you think you've got a program in place that is going to beat or exceed the market, or you've got the market licked, or your program is exclusive enough, it will humble you. It really will. And that would be one of the detriments, I would say, to pure dividend investing, is that I really like how Joe focuses in on the philosophy that he has drawn up for himself. I think it's wonderful. What I would stress to new investors, and I would exempt Joe from this based on what I've heard him say on the channel, is that working for 3 or 4% on a dividend on a compounding basis is absolutely worth it. But you have to have perspective to hold those names and put focus where the focus deserves to be put in the event of a downturn, okay? Because these good quality blue chip companies that are paying this dividend to shareholders are raising their dividend over time, and have paid shareholders historically, are not going to be exempt from a severe market downturn. It's not going to be, okay? And there will be a time when you're looking at your portfolio and you're like, wow, that 30% depreciated value really sticks out like a sore thumb, and that 3 or 4% you're working with, you got to keep perspective, okay? It's a good perspective, but it's hard for new investors to really gravitate to that when they see a portfolio on every single week that seemingly just goes up every single day. Well, here's some news for you. Every stock right now is going up because sentiment is so positive on the market. The underlying fundamentals of the market are good. And it's easy to be an investor. It really is. It's just easy to be an investor. And when the stock market becomes not so easy, those are the times that you remember. Those are the times that I remember. I'm like, wow, I'm learning lessons, right? I will never do this again. I will never overexpose myself. I will always have a cash buffer. I learn these lessons through being an investor, and I share those with you guys openly, all right? If you hear me, you'll be wiser for it. You really will, because now's the time when there's so much calm to be having these discussions and reevaluating your particular exposure to the market, maybe adjusting accordingly, maybe not. Strengthen up a little bit, anticipate a downturn, okay? What are you gonna do? Why did you enter your program in the first place? All rhetorical questions for you guys to answer for yourself, all right? Happy Fridays, everyone. Hope is having a great day. I had a phenomenal day today. It was great, all good. Independent Investor Channel says, yes, and thank you. You're very welcome. I just appreciate you coming and spending your time with me and helping support the message. I do really expect that if you're not into the channel, you can certainly go your own way, and I wish you all the best. But for the loyal subscribers that come in and they know that they've got that one inject every week, if I start doing more frequent uploads, so be it. Right now, I don't have the time nor the motivation to do it. And until my motivation comes back, this is the way that it's going to continue to be on the Independent Investor Channel. I'm going to come on and then I'm going to do my 2-hour live stream every Friday, because this is what I really enjoy doing. I love it, and I hope you guys feel the same about it. All right, I really think we're rapid fire providing a little bit of value. I'll never run out of content. There's always something to talk about with you guys. And I know you guys always have issues you want to try to bounce off of me and enter it into the community. That way we can kind of stay on the cutting edge, or as close as we can, about your options and solutions in the stock market, okay? Good stuff. Thank you for that. JG, watch every Friday. Rock on, man. I'm kind of a dork. I kind of thought for a while there that I might have been the only one in the world that really enjoyed finances as much as I do. Come to find out through this Independent Investor Project, I found out that there's a lot of people out there who feel a lot like me. Furthermore, I found out that there was a lot of folks with some really, really good potential that didn't know squat about investing. They didn't know squat. And we had a lot to provide to those folks in way of kind of streamlining the information, putting them on a fast track to get the stuff right. Because if you can get it right initially, you'll be so much better down the line. You'll have so much more confidence in your program when you enter into these downturns that I talk about that are inevitable, okay? Not avoidable, inevitable, okay? There's not going to be anybody that calls themselves an investor that isn't subjecting themselves to some market risk, volatility, and some downside potential right now. There's not one investor out there, and I don't care about those folks who come onto YouTube and profess to have all the answers. Those folks, I would highly encourage you guys, if you're getting that type of impression from folks, to kindly hit the end button and walk the other way. Okay? That kind of stuff just doesn't exist. Politics, religion, and money, tough subjects. They are. And I wish everybody the best. I really am not a big fan of this divisiveness. It's really become apparent over the last couple of years to me. I just don't understand it. I don't. I have friends from all different walks of life, all different ethnicities, all different orientations, all different perspectives. And I don't know. My circles of people that I interact with, it seems like we're kind of like in some sort of bubble. And it seems like everybody's picking sides. I think that's a real shallow way of approaching things. And I'll just leave that at that. All right. Cool. Iran scuffle with the British boat seemed to cause a drop towards the end of the day. There was a couple seizures, I believe, of some tankers, and it was amazing how little oil actually moved on that. That was interesting enough. But yeah, we'll see what happens. You know I'm loyal. You are. We got Mr. Tim Tellers in the line, certainly loyal. And I got to be honest with you, when I recognize the faces that come in and the support the channel, that's really the fuel that keeps me going, no doubt about it. If you guys feel like you want to do something crazy with your life, start a YouTube channel, all right? And keep in mind, my motivation comes through what I feel is very important in way of a message, okay? I'm not making $100,000 every month on YouTube, okay? I'm not making hardly anything, I'm telling you. I've made a little bit. I've recovered my initial investment, which is a good thing, and getting a little bit of compensation for my time. I would consider it a side hustle. But I will not compromise my integrity for the sake of coming on and becoming a YouTube star. I won't do that. I believe that the message, if you're willing to hear it, and you dare to hear it, and you dare to not buy into the fact that I don't have a lot of rah-rah enthusiasm. What you see is what you get. This is me. I don't pretend to be anybody that I'm not. Anybody will tell you that knows me. It's as if they're talking to me on any given day, tuning into a live stream. And I do think there's folks out there that do appreciate that, Tim, and I do appreciate that comment. Thank you. The Sin stocks are up. I saw that with Altria and Philip Morris. I saw both of the stocks, and I was actually considering taking position. I'm going to be honest with you, I have a hard time separating my moral conviction with these stocks. I've owned them. I've made money. That's all great and plenty. And I'm not saying to invest based on conviction alone. But I missed it with those. I think the valuation on Altria is very attractive. I think both of them just pay a phenomenal dividend. You know, I think it probably gave you a very brief, interesting entry point. I don't necessarily know if they're just a run out and buy right here. I'm really not interested at owning them with all the talk surrounding the vaping industry, and that's the moral piece that I kind of have a problem with. I don't smoke. I know people that do. I know how sad it is, and I've got my feeling on vaping. I don't think it's the healthy alternative either. I mean, if you want a healthy alternative to smoking, try eating a banana and going and exercising. And I don't mean to offend you guys that smoke, man. I used to do it. I know how tough it is. It's tough. Okay. But as far as buying into the stock and making money off of those companies that are doing something that I morally disagree with, that's just my personal choice. And quite frankly, I just gave you 69 other reasons or other alternatives as to how I seek my exposure to the stock market. Okay. So, but you're right, man. They did. They went up huge. I saw the big jump in Philip Morris this week. It was interesting enough. Altria went up above 50, so still a really good bargain here. Sub 50, right at 50, just above 50. MO, the ticker symbol in Altria, good value there, I believe. All right, make them 2 tankers, Kanon. Make that 2 tankers. That's right. That's what I was referring to. Iran seized a couple of tankers there. This is the 3rd one, actually, these 2 together, from what I understand. I'll have to read more about it this evening when I get done with you fine people. All right. Whoa, Avi A says, trimmed my portfolio way back this week. Let the high flyers go. Probably not the worst idea. You know, put some profit, put some white meat in there and kind of sit on it, shifting into cash and solid dividend playing blue chips. I kind of like to know what some of those are. Take my advice, kick over and spend some time on the other channel that I mentioned earlier. I think you guys will get some killer benefit out of it. Again, I don't mean to just openly promote somebody's channel, but it's my channel. I can do what I want. I think there's real value there for you guys. And I think hearing it from his perspective, hearing it from my perspective, I think it's a good mix. I think our intentions are good in that you can actually trip, fall, and deploy the information that we're talking about. And it can really accelerate your head start in the stock market and probably set you up for the best chances of success long term, no doubt. Because I've condoned the fly by the night. I'm not a big advocate of stock market courses, etc. I could probably come out with one and make a ton of money. I can't do that. I can't manufacture the motivation that I would need to do something like that. Do I want to? Yes, I do. And if I do it, it's going to be my way, and it's going to be the way I want to do it when I have time to devote to the project. But until I have that time, I will not seek out that endeavor and look to subject my subscriber base to that type of avenue on the channel. I won't do it. Okay. All right. Probably a good idea trimming a Chris Hood right below here. Going in sequence here, just opened a Roth IRA. What 2 Vanguard ETFs would you recommend? I'm liking VYM, VIG, you bet. Phenomenal. I mean, one or the other. If I'm not mistaken, let's check the VIG. If those aren't both the dividend ETFs there. I know VYM is, but VIG, if it's not the growth. Am I correct on that, guys? You guys can cross-check me there if you'd like. I think VIG is the growth. Let me log in here just a sec so I'm not spitting poor information through YouTube. Yeah, dividend appreciation. So what I would do there probably is look at the prospect of just getting a starting ETF in one of those. Those are both really, really good funds. VYM is one of my favorites. It really is. I would select one of those 2. And if you wanted to start the Roth IRA with 2, you could do the VYM, VIG. VTI is one that I do own. I don't own VYM currently. I have previously made good money with it. You know, but a total market, you could get by with just one. You know, you could jump into the S&P 500, but I like your thought process of going something a little bit more weighted toward the dividend, especially if we enter into a downturn. That's going to be easy. You're going to look at it and say, oh, I'm down 30%. I'm going to double up the position. Seriously. I mean, if you had $1,000 or if you have the full 6,000 for contribution this year, right, you could put the 6,000 in, buy 1,000 or 1,500 now. If it goes down 10%, go ahead and do the other 1,500 or $1,000, right? You see how my thought is? Down 20%, go ahead and put in the next. So you're strategically buying on the down, right? Yeah, I mean, you're going to win long term with that. Those are both really good, but I would buy one or the other if you're going with a dividend aspect of that portfolio. Remember, the real takeaway from my channel is advocating not just for the asset that you put within the account, but acknowledgement to the importance of the Roth IRA and the reduction or elimination of fees and how that impacts that particular asset that you choose to put in there. So don't look at it as a singular choice, okay? Those are some of the top tier assets that are available in the marketplace, okay? So you're great there. You're asking right question. All right, but just keep in mind that it's a holistic plan that we're looking at. Right account, tax protection, wealth preservation, and then get that exposure limit in there. And that's kind of up for you to determine whether or not you just want to take the entire 6,000 and dump it on the stock market in an ETF. I would probably consider taking a little bit more conservative approach and scaling some of that money into the market. All right, Chris, thank you for the question. Those are the types of questions I really like to get in the live stream, man. It's awesome. Thank you. If you need more clarity, let me know. All right. They let one tanker go. You guys are updating me on the independent investor channel on the tanker situation over with the drones being taken over and the tankers being released. VYN is a better dividend ETF. Hector, thank you. I appreciate that. I think you're right. I think VYM, if I'm not mistaken, might be a featured ETF. VIG is not. I haven't done a cross comparison between the two. But Hector, thank you. I appreciate that. That's great. That was my inkling, but I didn't have the research and comparison between the two to back it up. They're both dividends funds, but yeah, I've always heard that as a consensus through the group that VYF is a better offering. All right. Dan Tank says VPU. Interestingly enough, VPU has been one of my holdings that I've really enjoyed. If you guys click over to my M1 Finance, you're going to find that my utilities exposure, it's actually the only Vanguard ETF that I double up on. So I own it in the Spider portfolio that I've given you guys a link to. That account only has about $1,700. It's performed quite well. I think it's up around 7 or 8%. I'm not really sure. Stand by a sec. It logged me out. Anyway, yeah, it's good. It's performed well. It's kind of a barometer of the stock market. You guys can kind of see there my custom allocation. I want to be a little bit more aggressive. So obviously the 14% in technology is a little bit more aggressive. And then a little bit less exposure as you drop down to, materials, communication sector, energy, and utilities. Dan, as you point out, but VPU has just been on freaking fire. I'm up 10% in VPU. Hell, I was down 15% in it when I was like, Jesus, this sucks. But I held it. I held true. I took it into deep water. I might have strategically bought more. Can't really tell you off the cuff if I did or not, but I'm up 10% now. I'm up a bunch. I'm good. I mean, I'm definitely outpacing the number of years that I've owned the ETF and dividend reinvestment to boot. All right. So that's another thing when you're looking at that historical tab in M1 Finance. It may give you the market performance, but it's not going to account for dividends reinvested. Okay. They don't have the ability to do that because it's quite complex, and it would really be difficult to quantify that with regard to how they do portfolio reinvesting and not dividend reinvesting. Okay. Well, VPU down the road. Yeah, VPU is a good way of getting your utilities exposure. And I typically keep my utilities exposure a little bit lower, especially when compared to some of the other YouTube. That's just my choice. I think it's a boring moneymaker, right? Do I want utilities to be the top weighted sector in my portfolio? No, I don't. It's technology. That's just the way I want to invest. And I'll win, lose, or draw with that philosophy. It has to be technology. Has to. It's my favorite sector. It always has been. I've made a ton of money with it. And again, 14% is not one of those things that I consider overexposed. Good grief. I would push it all the way up to about 20%. And I've been there at times. Right now, you can kind of see my highest weighted right now, we're looking at financials at 17.56. That's based on a valuation perspective. I mean, financials right now are just really, really, I think they're really setting up well. And I just love Bank of America. I'm so glad to own that company right now. It's so fun. I am in a perfect example of a happy customer with Bank of America. I've never done banking with JP Morgan Chase. I'm glad to own it. Wells Fargo with the account scandal, blah, blah, whoop-de-doo. I don't care. Pay me a fat dividend, whatever. It'll blow over eventually, just like everything else. But I'm glad to own it. And the couple banks that were recommended as well on Joe's show there, the Canadian banks, I've looked at those previously, but I've never pulled the trigger, but own both of them now. I'm glad to do so. They pay a nice dividend. A1 rated stocks, financials are phenomenal, valuations are phenomenal, very, very safe investments, and that's really where I want the bulk of my weighting in the portfolio right now. That's just where I'm at, and then industrials close behind. I've got Henry Kwok BSN RN. I hope I got that right. I have a question. How often should you check on your investment? Once a day, once a week, once a month, once every 3 months, and every year? I'll surprise you with my answer, because you come on to the Independent Investor channel and you sit through an hour and 35 minutes of blah, blah, hoopla. I've actually enjoyed this, but my answer to you, and I want to say something that you're going to remember. All right. All right. And I've said this many times. And for the folks that have heard me say this before, I apologize ahead of time. But the best investors year in and year out are dead people. Okay. They're those accounts that are surrendered and they don't have an heir to them. All right. Those are the folks that have the highest rate of returns. Why? Because you don't have tinkering. You don't. Okay. You keep that in mind. There's an inherent lesson there to be learned. What I said at the top of the show is I monitor my Roth IRAs. They're self-directed. I monitor them, but I'm really, really taking a concerted effort to work on the portfolio in a manner that allows me to not work so hard on the portfolio. Okay? I honestly feel that way. It can be very addicting. It's about as good as anything to be addicted to. I consider investing a hobby. I hope you look at investing with the same passion that I do. And it's possible. It really is. I hope you catch some of the fire. I hope that fire is able to carry you through maybe certain less than adequate decisions that you make, and you'll make them. The stock market is alluring in that manner. You say, God, I've got this licked. You know, I mean, I had, for example, I almost made a swing trade on Microsoft. Okay. I had the buy order in for 100 shares of Microsoft. I had it ready to pull the trigger at 3:59 Eastern Standard Time. I held off. I didn't. But it's that discipline a little bit that will talk to you, and it'll remind you that keeping with your plan is always the best medicine. But it's addicting. It really is. You know, the stock market can render a lot of success. It really can. And it's going to be so much more beneficial for you guys if you can harness that power and stay in line with your plan. Okay, stay in line with your plan. If you're going to invest in a Home Depot, know why. You're going to invest in a Walmart, know why. Costco, right? Target, some of these good businesses. I just explained Bank of America. Is that good enough of a rationale to invest in a company? I contend yes, it really is. Because when times hit the fan and things really get tough, you can really understand why, in fact, you're with a company, and it can really help you carry through. It's really up to you, and I'm not going to tell you what you should do. I think with the level of access and your opportunity to pull up your accounts on your smartphone and be aware and be educated. There's not a whole lot that could come out of just checking your account and seeing where it's at. I have the discipline to look at my account and say, okay, I'm down $500, big deal. Whatever, it's there, boom, it's done. 1 second of acknowledgement, that's it. Same, I'm up $1,200. Okay, whoop-de-doo. I don't care about that. I don't. So my answer to you is, if you're going to allow that frequent monitoring to impact your decision, don't do it. If you're going to use frequent monitoring with the intent of educating yourself, really getting in tune with your investments, looking at the prospects of changes with your investment, those are all good things. but those motives are good. Make sure that you have good motives behind why you're monitoring it. Are you monitoring it to pick off 12% of appreciation when you should be just leaving that asset alone? Then I would throw a red flag on that. Okay, so you got to be kind of careful with what you hope to get out of monitoring. I hope you got a little bit out of why I do it. I spend the majority of my time looking at stock maybe that I don't own. Okay, I already know what I own. Okay, but I don't typically look at my account with the intent of finagling and making. I have stock in my portfolio that I gave you guys that I've had for years, and it's made a lot of difference. I've sold off some stock. I just entered back into Union Pacific. I used to own that share. I believe I picked up my original position in Union Pacific at $50. 50. I would have been more than quadrupled my money at this point had I just held the shares. Okay. And way too many people are devoting their time to considering selling when I think all you should be really focusing on is accumulating share base. Don't even look at the money. Money doesn't even matter. Accumulate share base. Okay. If you look at a portfolio like mine and say, man, I want that, I'll be your biggest advocate. I will be your biggest champion. I will be your biggest coach because I know you can do it. This portfolio is not free of mistakes along the way. If you can look to build a nice sound portfolio and that's your goal and you're devoted to that goal, you can do it. It's just going to take a little bit of time. All right. But pay attention to the missteps that I talk about on the channel too, and get yourself into the right program as earlier on as you can to help avoid some of those missteps. All right. All right. We got an hour and 40 minutes, guys. It seems like I've been going for like 5 minutes. I kid. Does anybody else feel the same way? Jeez Louise, man, it's the fastest 2 hours I have every single week. And it's the 2 hours I look the most forward to. So let me try to get to some of these others. Joe Carlson, great stuff. As you do a collab, that would be awesome. I don't have a sense of where he's coming from or what the channel's growing really fast. I wish him all the well. I hope he gets to 100,000 subscribers because I really think the content is very, very good. I think the impact that he's making is good. I hold that same criteria for anyone else on YouTube. I know he's down on bashing. I'm a little more open with my opinion about the potential damage of other channels. So while you've got good channels out there trying to do the right thing, I think you've equally got enough channels that are out there probably causing a negative impact on investors. And I don't mean to imply that is absolutely going on, but if it is, there's no excuse for it. There's not. But we'll see. I would be open to the idea. I'd be open to the idea of doing a collaboration with some of the folks that have actually been with me for a while, Brent and Dave and those guys. I'd like to set that up. I mean, if they want to hit me up with a solicitation, to be quite honest with you, I would do a collaboration with either one of those two guys right now. If they have the technical genius enough to throw me on there and do a collab, I'm down. I would pop on there and talk on the fly. I don't need to script anything. I don't need to do any of that. If they want a Q&A, they can ask me anything they want about my investing or anything they want. I think it'd be quite interesting. But I actually think I owe it to those guys, to be honest with you. I'm kind of a loyal fella. And I don't know, he has to run his business the way he wants to run his business. And I haven't got enough of a pulse. I didn't have that pulse when I solicited for a collaboration with Ryan Scribner. He was just gracious enough to provide the opportunity when he was a nobody. He had 6,000 subscribers, so that means he's a nobody. No, I sensed that he was genuine in his message, and I resonated with what he had to say. And that's all. Pretty simple. Scribner's a millionaire now. I mean, and that's awesome. He's running probably a $10 or $15 million business right now, and I don't look at him any different than I looked at him before when he was quitting his job. Doesn't mean nothing to me. I just wish him all the best, but we'll see what happens. I'm open to all those ideas for sure. We'll see what happens. Did you cut out? I don't think so. Doggy days. Says the show is brilliant. I'm really glad. Again, if you can get some value out of that, the whole idea by coming into this community is such that you don't have to find answers just from my channel. If there's value to be had elsewhere, where I'll turn you on to it. I could care less, because the only person I really care about and am very protective of is the message that you guys are getting and how you're deploying that message. Now, the deployment of the portfolio, you're going to notice a difference, and I'll leave that up to you guys with regard to how aggressive maybe I think he should be, or maybe the lack of aggressiveness, but he justifies everything he does. I think it's pretty cool. Check it out. All right. Thank you, Ryan. You're welcome. I've got some Altria, Caterpillar, Wells Fargo, Walgreens, CVS. I probably would have bought a side. Well, Walgreens is a good buy too, but CVS is a screamer. 3M on the dip last couple weeks. Doggy days, I like it. I like your approach. There's some real value there. Look at the industries that you're becoming exposed to. That's phenomenal. Pretty heavy in industrials. You got the healthcare there. You got a financial. So I'm good with it. It's discretionary. So you're starting to spread across some of the sectors, right? So good idea. I like the picks. Good stuff. One of the many attributes of investing is variety. Wow, that's a really smart, that's insightful. I like it. Variety, it's just, I thought of diversification right away when I saw that word. I've found a lot of value in variety. I just think that's very insightful. I agree with that. Ernest says, my condolences. Absolutely. Yeah, for you guys, you can read the top of the thread there. Again, I will pass that along to my good friend, and certainly my heart goes out to you for sure. You've been part of my community and supported me for quite so many years. You bet. You bet. Thank you for what you do. No problem, Juan. I've got Juan Winikoff in the group here. No problem. This is fun for me. Don't make any misconceptions about, I put the level of work into this channel that I feel is warranted for the time that I put the work in. Sometimes you'll find that the upload schedule will really increase, and I'll be just firing on all cylinders. Other times I'll pull back a little bit. That's why I don't think I could have the stress of YouTube over my head all the time to continually produce content if it's not coming natural. I couldn't do it. Just a little insight there. If you think I'm joking, try it. Try it. It'll challenge the most savvy of individuals. All right. And I've got a pretty interesting topic here in that I don't want people to get in trouble with this topic. I think there's success for everybody out there. I think the level of intelligence or education that you think you need in the stock market is probably significantly less. I think success in the stock market can come for anybody, and I think it doesn't take a genius to put some money on a good quality name in the right account. It just doesn't. I can't water it down any more than that. I can't. And if you're willing to deploy a little bit of discipline, I think you'll find that success is fairly easy to come across in the stock market. It really is. Especially if you deploy some of the more strategic application that I talk about as well, taking advantage of volatility, not wavering when a stock goes down, not focusing on the red when it goes down, maybe even looking to exploit that opportunity, right? Okay, you got to strategically think. Use your noodle, all right? Good stuff. I get investing with Aaron in the group here. Awesome. I recognize your thumbnail. Had some good conversations on some of the community stuff on some of my videos that I put out. Thank you for coming in here. He says, hello, Ryan. Appreciate. I'll have to kick over and check over your channel as well. I'm sorry if you are a channel creator. Thanks for coming in. I always do that shout out. I've done it ever since I started the live stream. Contrary to maybe other opinion where other investing channels want to come in, I look at it as networking. I really do. I think we're all more powerful together if we can continue to stay on the cutting edge of products that are available, especially in way of accounts. I think we're doing a good job of sowing those opportunities for folks who come to these channels for those types of solutions. So really, really important. All right. He says 99 degrees in Missouri. That's chilly. It's supposed to be 114 tomorrow in Virginia. It's just nasty. It's terrible. Nice week. Finally a pullback, right? So Brent, yeah, I don't know. This doesn't feel like a pullback. It doesn't feel like a pullback at all. To me, it sounds like a blip. It feels like a blip. I didn't do a whole lot of strategic moving this week, to be honest with you. I just think that whatever upside we're able to eke out of the stock market, I think is probably quickly going to be dissolved away with what's going to be an eventual retracement. I do. So just be careful about putting new capital to work right here. Ask yourself, what do you feel like you're looking to get out of that new capital and upside appreciation? Okay, now if it's going to be dividends and that's going to be your approach, no problem. Just use some scale in doing so. Okay, don't overexpose yourself. The stock market's not going anywhere. All right, it's there to be used at your leisure and at your comfort level. Okay, always remember that. All right. About an hour and 50 here on the live stream. I'm going to continue to go until I get to the end of this. Hopefully I'm able to get through all these questions. I've got Noella, my good friend from Canada, in the group here. Noella, thank you for coming in, supporting. I think you were probably one of the very first subscribers to the Independent Investor channel, and certainly a big thank you for you. I don't know if you're still on the live stream. If you kicked on to say hello, I appreciate that. If you kicked off, if you signed off, thanks for coming on and rendering your support. I manage multiple funds, but this week I led a number of med-term positions, Square, Twilio, SHOP, Cyber, all great stocks that I did not want to be greedy with after a great run. Smart, good stuff. I like it. No need to play with fire right here with heavy growth, with high growth. Good companies too. That's the unfortunate part about it. But sentiment turns. Those high growth are going to be the first to get whacked. And I'm not saying it's not a good way to invest, but you just have to have a little bit higher risk tolerance if the market doesn't end up getting a little bit cranky. All right. 401k, invest enough to max out the company match. After that, the Roth IRA. Well said. Ernesto's kind of repeating some of the things that I've talked about. Well, I couldn't have said it better myself. I agree with that. All right. I have my Roth 401k with Fidelity 50, S&P 500, 30 small cap, and 20 REITs. Good stuff. I like that. I like when you guys share these portfolios. I wish I could sink my teeth into some of these offerings at the start of the live stream. I'd really have a little bit more to go off of. Dan Tank says, love the TSP. It's like having the ability to max out 2 IRAs if you have the TSP and an IRA. I will go one further and say that if you have the Roth TSP and an IRA, the new blended retirement just kind of changed some of that. But you're absolutely correct. What you said there in that statement is really one of the smartest statements I've heard regarding the TSP. Very few people understand that they have the ability to tax protect $19,000 per year and also contribute to an individual Roth IRA at $6,000. If you're married, double it. So you've got the ability to really tax protect a lot of money there. Thank you for offering that in the comment. I agree with that. Very smart comment, and I'm very aware of it. Very aware. We're doing quite fine. We're tax every dollar that I have is tax protected, except for the 3 brokerage accounts that I have. But those positions I just hold long anyway. All right, to avoid the capital gains tax. Is it that hard? I got doggy days. Love M1 started dividend investing being 29. That's awesome. It's super young. It's awesome. You got the world is your oyster if you're 29. That's crazy. Some of the great dividend stocks, Exxon, Ford, have the same stock price from 12 years ago. That's true. But again, don't write off the dividend reinvestment. I've owned Exxon. I think I bought it a little bit high. It's been down ever since, but I'm accumulating free shares, building a base here in the 70s. I'll continue to own it and be an investor, no problem. Seems like the VOO might be the best, plus a few dividend stocks. I can't discredit that. I think that's actually one of the very best approaches for any investor. If I had it to do over again, that's what I'd do. No screwing around. If I had it to do over again, I would buy VOO, and that's all I would own. Seriously. I've got some money that's positioned in my portfolio so I can actually do just that. But I'm not going to take the amount of money that I have in dry powder right now in the portfolio and put it on the VOO. I'm not going to do that. I'm not going to subject a large piece of money to the index right now. I'm not going to do that. I'd rather own individual stock at this point and continue to increase my dividend appreciation. That's it. I'm happy. The stocks are paying me no matter what. So I'm good to go. But I think you're absolutely right. I really think I would look and study up on owning the S&P 500, 510 companies. You're good to go there. Great rate of return year over year. Just think about it, okay? When you do own the index, it's better to own it and forget it. Like there's no research that you really need to do. None, zero. It's the barometer of the stock market. You buy it, you own it, you put it in the account, you forget it, okay? Really good stuff. Started some new positions, mostly 1 to 3 shares. Plan to average down if I get a chance. You bet, man. That's awesome. So Bob's offering kind of just a scaling aspect. I mean, some of the stocks that I've mentioned to you, I have 5 shares in. Some of the positions I mentioned are way less than 1% of the portfolio. Some are, 0.5% of the portfolio. I own 10 shares of it. So, I'm a builder. Guys, I expect you to look at the stock market in the same way. Build for yourself. Build wealth. And that's how you do it right there. Good quality companies. Own a piece of these good quality companies. We have nothing like M1 Finance. I had a good comment here, I think. So let's see. I just jumped a bunch of comments here. Good grief. I could probably go another hour for crying out loud. Oh, guys, man, I do the best I can. But I get to the end of this, and it's ridiculous. So I just saw the first thumbnail, Lydia Santiago here. I don't know if she's working today, but I hate to give my shout out at minute 56 of the live stream, but I will absolutely do it. Great friend of the channel, been a featured channel of mine now for going on about a year anyway. And hopefully just adding that different perspective that I talk about. So good evening to you, Lydia. Thanks for popping in here. I don't know how long you've been in here. I do apologize for giving you the shout out at minute 20. I should probably, or 2 hours into it, I probably should just give the shout out close to the top of the live stream, but had a lot to talk about tonight. So if you did miss my portfolio review, please go back and take a look-see at that. I don't know how other creators feel about providing that transparency, but I enjoy doing it because I think there's a silver lining to offer in that, and hopefully you guys can appreciate that for sure. Kind of see how a freaking normal investor, somebody who doesn't come on CNBC and talk about the doom and gloom or the euphoria in the stock market. I'm just a regular fella who has a pretty respectable portfolio. All right. I hope you guys appreciate that. All right. So I get the message about the live stream so late. I apologize for that. Stephen T. That's a tough one. I do apologize for that. I do it at 9 o'clock Eastern Standard Time every Friday. So if you do make your way in here, I typically remain on schedule. I really do. So I've got Adriana Aristobal. Thanks for reviewing your portfolio. No problem. This was a really fun live stream for me. I am going to go ahead. I've got Ernest here. I tell you what, I could spend another hour addressing these last comments. I do apologize if I couldn't get to your comment. I would just ask if you're interested in participating in the live stream, add your comment before 9 o'clock. If you can add your comment, I usually come on here 2 hours before and throw the topic up into the community. And it usually takes a while for people to make their way in here. If you have a question you want me to address, throw it into the community tab prior to the live stream kicking off. And that way I can actually review your question. I don't mind doing it live fire, but throw it into the live stream and I'll address it during the live stream when it kicks off at 9 o'clock because I do the best I can. I follow along until it just dumps them all in there. And there's a ton of people in here I didn't even get to acknowledge. I got Jeff in here, folks that Ryan Calhoun's in the group is a channel creator. So I think, if I'm not mistaken, but a lot of folks I didn't even actually get to. But about 2 hours. I want to be fair to the folks that review the content after and don't have a chance to come on here for the live stream. Thank you to everybody who's come on and helped support the channel. I hope you guys took to heart what it is that I talked about tonight. That's real talk. It's real talk. All right. And if you've noticed a slight reduction on the upload schedule, that's the way it'll be. That's the way it'll be. And I won't apologize for it. What I would ask is that you remain loyal to the message, continue to deploy what it is that we talk about, because at the end of the day, this means nothing. This is a forum for discussion. If you can't take any of this information and put it to work for yourself, okay? I'm not looking to this to do a blog. I'm not looking to this to do a podcast and just blah, blah, talk about nothing under the sun. I typically try to really gear the conversation to y'all's benefit. And that's what we're going to continue to strive for until we really start to make an impact and generate some real wealth for each and every individual that dare to come on here and deploy some of the solutions that we talk about in the channel through discipline. Okay. And that's really where I'm going to leave it, guys. Thank you so much for making your way in on a Friday. Have a great weekend. Try to stay cool. And we will check you guys next Friday on the next live stream. Thank you so much. You guys be well. Thank you.